right. Good afternoon, everyone. It's 1:02, so we'll get started. Thanks for everyone for joining us for today's session. We have another great session planned. For those of you that don't know me, my name is Zach Friedman. I'm a business development executive here in Ontario, and I work out of the Markham office. We have Desjardins joining us today. They're going to be talking about their estate needs calculator, which I think you will find a great new concept to help grow your practice. So we do have Aris from Desjardins here today. He's a regional sales director who supports IDC. For those of you that worked with Aris know how good he is at his job. I know I can speak from experience working with Aris. I've known him to be nothing but reliable, hardworking, and positive. So definitely would encourage you all to connect with Aris. I know he's provided me with some valuable product comparisons and detail, not only about Desjardins products, but analysis throughout several carriers. So definitely connect with Aris after this presentation if you are in his region. As I mentioned, what Aris will be talking about today is Desjardins Estate Needs Calculator. It's an easy to navigate estate tool, which really is designed to protect individuals' estate needs at life expectancy. So this concept tool is designed to provide a customized and clear snapshot of the costs that apply to a client's estate. So I think which really will help this get those important conversations started, right? So as Aris will demonstrate, the client presentation reports that spit out with this tool are designed to be simple and easy to explain and provide you with a great opportunity to position the need for permanent life insurance with this tool. So without further ado, I'll pass it over to Aris and we'll get started today.
Thanks, Zach. I'm just going to share my screen to make sure I get that part sorted here. We'll cover a few topics today, and there may be some questions, but as Zach mentioned, feel free to ask away. I think we'll wrap it up. We'll be shorter than an hour anyway, so we'll probably have time to perhaps look at the actual tool and look at some sample reports just so you get a better understanding of the functionality, what the software can and can't do. But I put up a couple of company slides here, and I figured if it's your first time joining us for a webinar anyway, just a little bit of background about Desjardins. So we're just going to take a couple minutes here. More so if a client asks, who is Desjardins? You're proposing a policy. Just to give you sort of a sense of our size and scale, third largest insurer by assets. We're often ranked very, very well on safety and credit ratings and so forth. And we're a Canadian organization. We serve about 7.5 million Canadians. So a good chunk of the population deals with one of our divisions, not specific, not always life insurance, of course. We have many different arms, group investments, and so forth. So on the product side, I think some products may be fitting to talk about here in terms of our sweet spots, just given the nature of the presentation. But we have been competitively priced term, 10 and 20, very competitively priced. We have T100, sort of a wide range of par options. Recently introduced a 5-pay par, which is new to the Canadian marketplace. I have to get the question, what's the DSIR on your par? 6.2 this year. So we can send this out if anyone's interested. It's just a snapshot of our product lineup. We have a lot of product, as you can see, and we also have 3 disability products and a healthcare plan that's not even mentioned on here as well. So give us a ring if you're curious about any solution and how that fits into your clients. One thing I'll mention here, which is good opportunity for some clients, is we take credit cards on all policies if they're paying annually up to $10,000 a year. So that's a nice feature to have. That's the first year and subsequent years. So for those clients who love their points, that could be a nice fit in. Just some comparatives on term life. The carriers reprice so often. This is our most recent comparison, just to touch on kind of where we stand. If you bundle with CI or a combo of term and perm, we do offer some additional discounting, and we do have a contractual right to convert to joint last to die with 2 individual coverages. So that's a nice contractual feature in our term life offering. T100, you'll see a lot of ones here. This is just where we stand price-wise. Of course, with no cash values, outside of premium and face amount, there's not a lot to mention. But I will say, in the context of estate planning, of course, we have joint last to die, which is often a popular solution at specific age groups. But we also have a unique feature or option. We have joint last to die paid up on first death. So premiums would stop on first death. Great option to quote if you're on our software as an alternative to traditional joint last to die, especially if you're dealing with longer pay schedules and clients may be concerned about paying that long-term premium after that first death. So just another option to consider. It's available not just on T100, pretty much any permanent product on our shelf. And just on the par fund, a bit of background here. So 1.6 billion in total par assets. Our fund is managed by Desjardins Global Asset Management, and we do have much higher non-fixed income weighting than most par funds in the marketplace. In addition to that unique 5-pay solution we launched recently, just figured I'd share that with you. So kind of onto the meat of the presentation here. So this tool we've called the Estate Needs Calculator. We have many concept reports. This is one of them. So it's a great opportunity just to share a couple ideas with you. And if you're on our software, have a look at the concept list. There's quite a few that we've designed both for the individual and the business owner market as well. And the idea is really to help you position that insurance policy in a simple way to your clients. So, I did a survey. I called a few of my colleagues in the events case space in the industry and sort of just asked them about other estate tools. And from what I understand, there's not a lot out there. And if there are estate planning tools, the few that are there, the feedback I got is most of them are pretty complex. So, and that's the reason why we designed this tool. We wanted to keep it really simple, to the point, something that can help you in a discussion with a client without having to overcomplicate the conversation. So I'll sort of get into it. First off, we're going to talk about, needs and opportunities, maybe some language around estate planning. I'll showcase the calculator, talk about the functionality, and just put up a case study. And if we have time at the end, I've got the tool here. We could actually go in and run a scenario. So that's sort of the plan. But a few markets I'd consider using the tool for, if you think about clients you have that have more than one property, so people with cottages, rental properties is a great one. If you're thinking real estate, some agents work in, closely with clients who are very active in the real estate space. And you just want to keep in mind that if, clients flipping properties all the time or, planning on selling that one asset or multiple assets in the near future, probably not the right client or the right asset for sure to consider in the report. So, of course, we want to make sure that those assets are there at life expectancies when we're running the projections longer term. It makes sense. Generally speaking, clients over age 50, people who are, see value in contributing to an RSP or TFSA, A, because they have the cash flow that they're earmarking for the future, and B, they see value in saving on tax. Conversion opportunities, of course, and just wanted to kind of set the stage. The tool's not going to make the sale for you for sure, but it helps us kind of get down to a number and in the process, educate clients on things they're probably unaware of, like probate, obviously tax, final expenses, estate administration. So I often find just in general conversation with people that there's a lot of assumptions there. Oh, my secondary prop or my investment property is just going to roll over to my kids tax free, and everything is just fine. So I think there's a lot of interesting conversations that can come out of these reports. I guess I maybe to clarify in terms of maybe firstly what the tool cannot do. So it wasn't designed, of course, to replace lawyers' advice, accounting advice, or be a comprehensive financial plan. It doesn't work for corporate. So if you have a client who, of course, has a business assets, perhaps investments, properties, and so forth in the corporation, the tool wasn't designed to run those scenarios. There may be an opportunity to to incorporate some of that into the tool, but for the most part, it's designed strictly for individual needs. It also doesn't recommend any insurance solution. So the goal here isn't to, for us to generate a report that's going to tell the client to buy par or even insurance for that matter. It's just going to present the need, typically the largest cost, on all the reports I've seen is typically tax. And so, concise, meaningful way. And the tool is, I think, step two. Step one is obviously having that meeting with the client, asking the questions, getting a better understanding of what their plans are, as well. So now I did some Googling, I guess, last week when I was preparing for this presentation. I just wanted to have a look and see, what's out there in terms of, estate guides and checklists and so forth. And there's some great guides out there, but what I quickly realized is they're not something that really will lead a client towards any action, I guess. And the questions on the left, I took right out of some of these guides, and one of the ones that's very commonly at the top of these checklists is, do you have a will and power of attorney? Some statistics we have, 58% of Canadians don't have a will or a POA. So, we're not in the legal profession. Of course, clients should have them, but we know that more than half of Canadians don't. So, suggesting they go get a will or a POA is probably not where we want to start. Have you thought about the implications to your estate when you pass away? I think most clients would say no. Will your estate have enough cash to fund the tax liability on your death? No idea, right? And so these are the types of responses I think most clients would have to the traditional estate planning questionnaires. And the last one I found quite funny in a way. How would you like your wealth distributed when you die? I mean, this line of questioning is obviously not very positive, and most clients would be looking for the door, right? If we just ran them through these types of checklists without really giving this stuff any context. And of course, there's the hard facts we need to know, right? Do you have real estate? What properties do you own? What's the market value? What's the ACB? Their mortgages attached to them. So all of the hard facts are important to gather, but probably not, critically important during that first meeting, first conversation. Of course, we want to know that their intentions are to sell the property or keep it. That's going to throw our plan off quite a bit if they're selling a property or an asset in 2 or 3 years. And just having an idea of what their wealth plans look like. Do they have other accounts, investments, RSPs, how much they're contributing to them, and all the hard data that we need to really run a report. So I talked to a few advisors who are in this space, and they said, they've got some questions that they use to get clients talking. And I think, to me, this is where the conversations are should start anyway, is asking, and as you can see, the questions on the screen here are open-ended, and they actually show that, as an advisor, you're taking interest in the client's life. And so, just as an example, what does retirement look like to you? We're not asking for numbers. We're not asking, but we during that conversation, we're kind of exploring, their need. If they're planning on going to, Florida, that's going to change the estate planning conversation quite a bit. If they plan on just, staying where they're at, we can probably start there and get a pretty good idea of what income would look like. Another, good question I like, what's your biggest financial success and financial fear? So you can gauge, clients' risk tolerance there. Are they concerned about running out of money? Or are they concerned about having enough to pass on to their children? And so forth and so on. So I think it's these open-ended questions that really get the client in the right mindset, more so than the traditional, estate planning question. The last one I find, it's pretty direct, but, in the future, would you rather your assets move smoothly to your children a charity, or are you okay with CRA receiving a large piece of your net worth? So great question, I think, which is pretty direct, but it's, there's some shock value in that one. Another great tool we have at Desjardins, it's entirely separate from our estate needs calculator, is we call it the personal inventory of assets and important documents. It's available on Webi, webi.ca. It's our advisor portal. If you want to call me or email me after the presentation, I can send you a copy. And it's a great tool if you're looking for something to bring with you to your next, review meeting, to share with your client or add some value. It's a great tool. So the idea is that you are going to capture or you provide this document when it's completed to your client, but you're going to help them fill it out. And the idea is that they're going to document their contact information for the accountant, the lawyer, their group insurance policies, their auto policies, their bank accounts, essentially all that important financial information, and they'll keep it somewhere safe in their house and in a lockbox perhaps. So if something were to happen to them, one of their family members could quickly grab that document and know exactly what the account numbers are, who to call, and the idea of helping a client fill this out is to explore their situation a little more. I didn't know about that RSP at the bank. Could you introduce me? Perhaps there's an opportunity to get an introduction to an accountant or a center of influence that they work with. More importantly, just to reevaluate what we have with them on a review. So I think it's a great tool. A bit more art than science to utilizing it, but a nice value add that could fit in really well. And some of the questions built into this document are around wills and POAs. So a great PDF to have available if you're looking for something to share with a client on your next review. So let's kind of get into the calculator. So it's a simple tool. I'll sort of share with you where to find it. It's allows you to sort of customize the input around your client scenario. It's going to provide details on tax, details on probate by asset, and more importantly, provide a really slick, sort of simple PDF report that you could actually leave with your client, post meeting. And so where do you find it? You would get on our software. For those of you who are not contracted with Desjardins, that's okay. You don't have to be. You can go to our essentially our quoting software, which does not require a download. It's online. You would click on the quoting software. If you're not contracted, you could go to guest access. And then right on the top here, you would see under strategies, a drop-down list. And we continue to launch new concepts. The one you'd be looking for here is called the Estate Needs Calculator. And you would click on the export button. The export button would bring up the Excel tool, which would allow you to run the report, which I'll share with you. So the great news is no need to download, insurance illustration software. You just need our web link. You go into the tool, click on strategies, click on estate needs, and export the file, and you're pretty much ready to go. So, front to back to run a report, again, depending on the complexity of the assets and the detail, I would say if you're, comfortable, on new software, you'd probably be looking at somewhere between 15 to 20 minutes, again, depending on how much data we really have to enter. And of course, we could run multiple scenarios based on different rates of return on assets and so forth. So not a huge ask, but if you're working on that estate case, it might be a nice tool to kind of support those conversations and help you drill down a little deeper in terms of the actual values as well. So these are the four things it's going to highlight. Income tax, which I often found on every case I've ever ran, is 25% or more of the estate need. It's typically the largest component. Estate administration and legal fees. It's going to break down probate by asset and give you a total probate fee, and final expenses, which you can actually customize on the tool. So if you typically sell $25,000 or $50,000 of final expenses, you can tailor that on the report as well to be included in the total. Some important information. So on the real estate side, the tool will allow you to specify if it's a primary residence. Of course, that changes things quite a bit from with respect to taxation. You can specify if it's an investment property, for rental property as well. One thing you absolutely need to capture for secondary property is the purchase price. So, even if you're doing an initial F&A with a client, I would always strongly suggest to ask what they paid for it. Asking the ACB might seem a little technical, but real estate people love talking turkey, and they love talking about the market and their experience in real estate. So it's not really a tough one to get, but it's really important for calculation purposes that we know. Market value, probably less important. We could probably go online and figure out what the property's worth, but we could use the numbers they give us. So we don't need to the penny numbers. We can just assume what they tell us is close enough. Of course, ACB would include other things like legal fees and real estate commissions, but we can essentially, for simplicity purposes, just use the purchase price they tell us. Amortization and capital cost allowance. I'm not an accountant, but capital cost allowance is available typically. I should say less often, from what I understand, used in rental properties, which would allow a client, usually with their accountant's advice, to deduct some depreciation on the property. And there's a bit of a recapture on that down the line. So that's an optional field on the tool. Most cases, advisors I've worked with aren't selecting CCA or capital cost allowance on those properties, but you will see it on the input screen. Also, with respect to real estate or any asset, we can run either an individual or we could run a joint scenario. So joint could be most commonly with your spouse. It could be a business partner. It could be another family member. So it would allow, I guess, one or two clients on each individual report we'd be producing. There is an option for spousal rollover. So of course, my case, me and my wife own our home. So if I pass away, it would roll over to my spouse, and so you can indicate by asset if that rollover would apply. On other assets, the idea here is obviously to keep it nice and simple, not try to complicate it on a report, but the tool does allow us to input RSP values, rates of return. So you might be managing their investment portfolio. You can include rates of return in the report. Most of the time for real estate, people assume a simple number, 5%, or I've had a few advisors run these at 2 or 3%, which is just fine. I mean, you'd be surprised over 20 or 30 years. The estate need, even at a very low rate of return, on the deferred capital gain. With respect to RIFs, the tool will also automatically calculate minimum RIF payments. If you want to, you can set it for higher scheduled payments in the future, which of course impact the estate need as well. Other assets you can put in, TFSAs, indicate if non-registered accounts are individual or joint. So lots of flexibility with regards to the assets you enter and the rate of return you're using by asset. Liabilities. So on the debt side, you can actually tie the property and tie in a mortgage. In many of these scenarios that we run, even if we tie in a mortgage, depending on life expectancy, the debt would be paid off by then, just given the amortization on the associated mortgage. So oftentimes debt would show at zero by life expectancy, just depending on how we've added it in to the calculator. We can indicate interest rates and payment frequency and so forth to establish the net amount at life expectancy. And we can also put in other loans and leases, and I'll show you an example of that shortly. So I just ran a very simple scenario on our tool just to highlight what the report looks like. Of course, there's many different scenarios we could work with. But in this example, this is the first page of what the report would look like. Ran a really simple, individual assumption here. So here we've got client name, and of course, on the cover letter, advisor name. And here it's a 50-year-old male. I've selected it off as life expectancy. Actually is automatically calculated. So the tool will ask, is the client, what province are they based in? What's their age? We don't need the date of birth, but what's the age? What province are they based in? And smoker or non-smoker. And the reason we're asking smoker or non-smoker is the system will automatically calculate life expectancy, which is a nice little feature there. But we could actually run the projection. Here I said 83, but I could have ran it to age 90, right? So if you want to show that a little further out, or perhaps earlier, sooner than life expectancy, you have that option. Here on the cost, estate costs, you have flexibility here. The estate administration default is usually 5%. I questioned that when we first launched the tool, and one of our in-house legal experts provided me with some case law that validates 5%, which, as you can imagine, on a large estate is pretty significant. So I learned that a client can name or specify the administration costs in their will with respect to executor compensation. So that is a percentage you can modify. I mean, you could leave it at 0, but that's probably not very accurate. Legal accounting fees, same thing. We've got some defaults there that are based on standards in the industry, and same with final expenses. And you can index that as well. So of course, to keep up with inflation, for Bob here, we're looking at a 32, 33-year window. So $5,000 in accounting fees today is not going to be $5,000 in 32, 33 odd years. And here we've kept this particular report really simple. Bob has one home, right? Personal real estate, principal residence, I should say. Fair market value of $750,000, an RSP for $250,000, and he's also got a condo for I plugged the market value in at $550,000. So I've also attached some mortgages to these two assets, the real estate, and just arbitrarily put in some mortgage details on our tool. Of course, in some cases there may be no mortgage, so we don't have to attach any liability, and that would be 0. Now, you can't see it on this screen, but on the next page, you'll see a little more detail. So, in the RSP, we've determined that it's growing by 4% a year. We're putting in $3,000 in terms of an annual contribution. Of course, that's an optional feature. We could change that growth rate, which of course will impact the estate value. And same with the property. I've determined, 5% is the long-term annual growth rate on the property. We could run it at 3, we could run it at 7. So it's important to gauge your client. And if they're real estate investors and they've got, a significant amount of property, it may be worthwhile asking them, what they feel long-term rate of return would look like. So when we provide them with this report, we're somewhat in line with their expectation. And that ACB or purchase price here is really, really important to capture on the non-principal resident principal residents here. So we've got a condo, valued at $550,000. Bob paid $320,000 for it. Pretty straightforward. And now the next screen is quite good to have built into the report. Is the it's based on the province. We've selected here that Bob is based in Ontario. That's why we see the marginal tax rates for Ontario here. An important thing to note, client may be at an average tax rate of 35%, during their working life, but we have to remember at time of death, right? We've got to file one terminal tax return, and typically, that would be at a much higher rate. So it's nice that we have a table built in here. You can customize the rate on the software as well, or just leave it as the default. But if you're in BC and you select BC, then you of course would see the marginal tax rates for British Columbia. Also, the tool provides some guidelines with respect to probate. So clients may ask, great, well, I didn't think there was probate due on my principal residence. Well, CRA gets you eventually. There is sort of the calculation here, so we can see in Ontario where I'm based, it's $15 per thousand, fixed fee of $250, and sort of broken out for each province. It also goes into, and we'll show you the tax and the probate cost on each asset. So you can see here on Bob's house in Toronto, right? Although it's his principal residence, there's still going to be probate based on our projection of $57,000, and on the condo 42, and on the RIF, because of course we don't have a spouse to roll over in this particular situation as well. And the tax is broken out. So as you're getting into the data and walking a client through the total, you will basically see that have the breakout available. Sorry, I'm just trying to deal with a poll here. Let's see if I can get that minimized. Zach, are you online?
I am, yeah. I think you can just click the X for the poll.
Can you see that on my screen? Okay, I think there we go. Okay.
No, you're all good.
Okay. Thanks. So now this is the, I guess, the magic slide, so to speak. So the final, right? What is my client going to see as a total? So in this particular scenario, we've ran, the assets based on the rate of return, 5% on the property, I believe 4% for the RSPs. We just have a nice summary of here's what your estate is worth. And clients are often surprised. Wow, $7 million. That's a big number, right? But what you'll see is of course, all of those costs that we, clients often don't think about, the taxes being the biggest share for the most part, estate, admin, and legal fees based on the percentages we've added, the probate, final expenses, which we've determined. So now here we're working with an estate need of 1.3 million, right? Now we could run one of these reports, show it to a client, and they may say, well, okay, let's look at it if my real estate portfolio runs at 6 or 7, or what if my brother's my executor and I pay him 1.6% for administration and so forth. So we can run multiple scenarios and determine what the need is, but this is essentially the key slide, which totals the values based on our inputs. And now that we have an overall gap here of $1.3 million, that would lead us to the discussion as to how are we going to solve this. I mean, can we sell an asset? And of course, then it would naturally lead to the insurance conversation. In Bob's case, since he's 50-year-old male and non-smoker, speculating relatively good health here, we could look at, of course, a par solution that would keep up with the need. Perhaps a 20 pay. If Bob were a little older, we may look at a term 100, sort of no cash value, sort of stripped down cost of insurance type solution, and just build multiple solutions around the kind of predetermined need. So that's really it. I mean, that is the key slides in the report. We do also have additional slides which explain probate, explain some of the language and terminology. There's some additional appendices included in the report. It's a total of 12 pages, but the slides I've showed you are really, key to running that report. So that's pretty much it. I'm going to open it up for any questions, and perhaps if we have time, I'm going to look at the clock here. I could probably look at running a scenario and showcasing you or sharing the tool with you and some of the functionality.
Awesome. Thanks, Aris. We did have a few questions come in. First off, just going back to some of the product highlights before we get into the calculator itself. On the PAR product specifically, can you maybe comment on how Desjardins PAR product, how they operate in terms of allowing the term rider on the PAR product? Does it increase the additional deposit or the MTAR room, and how you guys kind of stand on that?
That's a great question, and thanks for the question there. So currently on our participating whole life product, we do not have the ability to add a term rider to the contract. So that would not impact of course, we could sell the client a term separately, which they can, of course, convert. But within the par policy, we could not add a term rider at this present moment. And in addition, with regards to additional deposit options, we are looking to do that, and that's been slated for late next year. But we don't have the ability to use ADO at this present moment. So we're looking at essentially, our 5-pay, which, if clients do want a quick fund, would allow on a guaranteed basis that premium to be paid up in 5 years. 10-pay, and we have both wealth and estate solutions on our 10 and our 20-pay option, and a pay to 100, of course, with your, classic dividend options of, premium offset and so forth. But I don't know if that answers the question, but.
No, that's perfect. Thanks, Aris. And I think that's kind of what I was going to say as well. For clients that are really looking to slam in as much money as possible, the 5-pay works great for that example. That's really all we had from a product standpoint. We did have a few people asking for the link to the specific tool,
okay,
and where they can find it. So maybe if we can send that out to the attendees after the presentations, that would be awesome. Yeah. Did have another question that just came in. Are TFSA assets included for the purpose of probate with this tool?
I would have to check. I believe we are allowed to, again, just going off memory here, I believe we're allowed to roll over TFSA assets to a spouse, if structured properly from the get-go. Otherwise, they would be taxable. That's my understanding, but I would have to double check.
Okay, perfect. And then, that was really it. Maybe if we want to pop open the tool and kind of run through an example, that might be helpful.
Sure, thanks. So I've got the same case. So just a note, Desjardins does plan to roll all our concepts onto our web-based software, so you won't have to deal with Excel in the near future. But for the time being, it is Excel. Little harder, just a couple extra steps to access the tool and so forth. But we plan on having it seamless on our website or shortly. But the reports are still here and honestly not too difficult to run. So here you would put in your name, of course. We would select or add in client's name, either one or two. We've added that joint option, so we get this additional field up here, so we could run a scenario with spousals, for example. So we could have Mary Matthews as well. We could put in her age of 47, and again smoker status, which really just is going to automatically determine life expectancy. That's why we're asking here. So we could have her as a smoker, for example, and you can see the defaults there. Tax rates are set. If you want to change them, you can, right? And this is Ontario, of course, but we could change the province. And down here, the estate costs is where you can tailor this, right? You can really leave it at the default if you want to. If you're not comfortable with those defaults, and or if your client may have a different view, of course, we can change that. You can change the indexing or the inflation factor to the legal and final expense bills as well, or you can just leave them if you prefer to use a flat 50 or 100, $25,000. Just put that indexing at 0. So the first page is, quick and easy to do. You could probably, if you're working on one of these for an existing client, you could probably run this through this particular section in less than 5 minutes. And the next step is you just click on the asset liability tab over here and kind of start from the top and work your way down. So on the scenario before I added Bob's spouse here, we had it, each asset was 100% owned by Bob, of course. Now that we have Mary in here and we're running a joint scenario, maybe we want to, throw in an additional, it's going to ask me to save this one first. So we've got his RSP. So I can make adjustments to this. I'm kind of starting into, got to edit the existing one here, but I'll just go back and save it. So down at the bottom on the asset liability page, we'll get a summary of what we've already keyed in. So in this case, I've put in Bob's individual real estate principal residence. I would click here, I would say, yes, I want to edit that particular asset. You may want to go back to this because, you want to just have a look at a different rate of return. What if the real estate goes up by 3? Let's look at a more conservative scenario with respect to growth on the asset. And, in this case, we could actually say it's, 50-50, right? So it's no longer Bob on his own, it's Bob and Mary. And we could actually say roll over to spouse at death, which will actually change the estate need quite a bit, right? Because we're going to be deferring the taxes on this or till last death. Loan attached. So here we can actually, include a mortgage loan balance. I often find on the cases I've been involved in, advisors will, for whatever reason, forget to drill down into the liability side. And depending on, the amortization, it may not be critical to utilize that if we feel that, or if we confidently know that debt's not going to be refinanced or based on the existing payment schedule, the property's paid off in 12 years and we're running a 35-year projection. We may not even need to include it, even if there is a mortgage, but it's there. The more information we have, the better, of course, and the more accurate it is. So we can include the loan details or just say no, save it. Now, this is personal use. So if it doesn't matter what I put the ACB at here, because it's a primary residence, it's not going to change the tax scenario. But what will happen is when we'll look at the condo, which was the other asset we've got saved in this report down below. If we assume and we edit this and we assume that's joined as well, just going to head back up here. So we can describe it. We've had clients with many properties, so we could actually put an address in there, or just so it's clear to the client. But the ACB is critically important here to make sure we're running accurate projections, and we've got that depreciation rate if they're using capital cost allowance. If not, just skip that. Often advisors don't know. They say, Aris, what would I use here? And it's, well, if we want to be accurate, we really have to check with the client to know if their accountant is claiming CCA on that particular property. Most cases I've encountered, the answer has been no, but that's really going to vary depending on the client. And here we would say 50-50 again in terms of ownership. Roll over to spouse at death, assuming these are jointly owned. So we kind of just continue to load in the assets and potentially liabilities. The RSP screen, I think, is pretty neat because you've got some more flexibility here on the tool.
Just sorry to interrupt, Aris. A couple questions have come in. In terms of inputting all of the data, does it limit you of moving forward if you cannot complete some of the information or leave that blank? Or can you kind of go back and forth and input information?
Great question. You could, it's a great question. So, I guess just to make sure I understand it, if you had inputted the property value.
Right.
Yeah, you could come back to it. Now, the challenge is, I guess we could save the file, file save as, save it to your desktop and come back to that particular screen with the client's name and everything preloaded in there. So that would be an option of just saving the Excel file and coming back to type it in later. Without some of the key data like, ACB on the secondary real estate or, rate of return, that type of thing, it's going to throw off the entire report, but we could definitely come back and enter it in later. I find this is, mainly designed for simple estate needs. If your client's got a corporation, joint ownership with multiple, parties, very complex estate needs, this tool's probably not going to help establish the entire need, but it could just work on the personal side, right? And you may want to look at the corporate and completely separate as well. So was there another question, Zach?
Yeah, just from the information that you input in their different province of residence, I'm assuming the tool will update all the applicable fees and say probate fees for each province as they differ as well, right?
You're right. So if Bob here happened to own his condo in Alberta, we would select that. and probate fees would be determined based on the Alberta schedule, right?
Perfect.
So important to kind of specify the province on the asset as well, and for the most part, I think people would largely retain investments in the same province, but you never know. You never know. It's worth asking, especially with I hear a lot of former investors in the Toronto market have moved money to Alberta over the last couple of years.
Right. Okay. Perfect. Yeah. And then just to reiterate, this is a live Excel document that they can download and save to their computer, right? So it's something that's available offline.
I haven't tried that, to be quite honest. I've continued to go in, so I'd have to actually test that out. Okay. So most likely you'd have to click back on our software, click on the strategies tab, and export the file. So you'd have to sort of start off from our software and load it up. Okay. It's not dependent on what you have on the software, so you don't really have to type in a quote or enter client information on the illustration software itself. You can just click strategies and sort of load the tool. I would have to double check if we could just save this and if it would work properly. I'm assuming it will. Yeah.
Perfect. Okay. Yeah, that was really all the questions we have now. So
thanks. And so here's kind of the RSP scenario. Fair market value. Of course, we have that same magic button, rollover to spouse at death, which we all know is going to impact the tax bill, or defer the tax bill till last death, and then we can add in additional details or scenarios based on that RIF. Right? If we don't do anything and we just specify an RSP, the software is going to calculate minimum RIF payments starting at age 71. So a nice sort of very simple scenario to run with. And depending on how deep we get into that conversation with the client, we may just want to give them a real simple number based on the real estate, based on what we know about the growth in their portfolio, and leave the discussion about retirement income to that future discussion when we're showing them the report, and perhaps go back to the table and run another scenario. So yeah, we can just continue adding assets. We would continue adding additional assets or liabilities up here at the top, TFSAs and so forth. And when we're all said and done, I would strongly suggest just going down into the lower part of the software tool there, where you see a quick summary. But again, the PDF report is going to detail everything we've included here, and we would just essentially click on this PDF button and sit back and wait. As you can see, because I've run a joint scenario here, it gives us the option of, do you want to see Bob on his own, Mary on her own, or do you want to look at a joint report? So that will produce, just different options to select, and we can click on, one of these, and we'll get the report up. So, looking at the report and kind of just validating what you've entered, that's where I think you'll spend a little more time, just to make sure you feel it's accurate, based on what you know about your client, based on your assumptions and so forth. But great report, nice and simple, leave behind. Of course, everyone wants to, show their client a nice big par policy, but I think this really helps define that need, and educate clients. I mean, I've just found so many clients are you just have misconceptions around probate and how tax works at death, and so having it on a document, having a hard number to be able to show them is quite powerful. So as you can see, I'm waiting here for the report to load, and this is what we get. So I'll just check that everything seems to make sense. So same kind of cover page, pretty straightforward. Your information, date, client's information, a little bit about estate planning. Nice simple client, easy for client to read. Again, the summary. Just wanted to highlight this is actually pretty important. So the projection here is a joint scenario. You can see the total estate value and then the net estate value at the bottom. Now, there is not a particular line where it's going to tell you that estate need is roughly $1.1 million. Right? So it takes you 30 seconds to calculate that, but there's not a big box that says total estate need is. It sort of takes the 6.7 We can see there's no debt at life expectancy. We took off the liabilities there, the mortgages that were tied into those properties. There's the tax bill, estate admin, legal, probate, final, and the net. So, of course, the conversation is, how do we fill this gap, right? What are we going to do here if you plan on transferring these properties to your children or so forth? So then there's kind of that summary page I showed you earlier, life expectancy, projected age on death based on age and smoker status, a summary of the estate costs, all the data entry is here. You'll see this is general assumptions that are made, that we've determined here, 2% estate min fees and so forth, probate. So there's additional information, and this talks about different options. So options that are available: liquidating assets, borrowing funds, and of course the magical using life insurance or permanent life insurance to cover off that gap. Same breakout, right? We didn't change anything on the RSP for Bob. 250,000, 4% annual growth rate. If I had a non-registered portfolio in here, it'd be pretty important to indicate, the adjusted cost base is there as well. Oops, sorry, jump slides. Sorry, everyone. Detailed list of real estate. So just a summary of what we typed in. No liabilities. Back to the income tax, marginal tax rates here. Probate schedule and the probate fees and tax broken out by asset. So real simple report, some additional information, a nice disclaimer here, glossary of terminology. So 12 pages in total, of which I would say 4 to 5 are really, central to the conversation. Nice simple tool. If there are more complex needs, we do have a product expertise team we can reach out to and work with to look at corporate scenarios. We can consult with together with you. But with respect to tools, this is, the intention here was to keep it nice and simple.
Yeah, no, that's perfect. I think if you have the ability to send over the link for people to access this, and then
sure.
I'm not sure if you're able to send over a PDF copy of the presentation. I think there was some valuable nuggets in there too that people are looking for, just from a high level product standpoint. Some of those open-ended questions, that would be great. But I would encourage everyone to reach out to Aris and dive in deeper with this tool, or just any products in general from Desjardins. Aris is a great asset for us. So thanks for the time today, Aris.
And I'm just putting up the slide here. So if you're looking to connect with your local wholesaler, feel free to email me if you'd like to. If you have any questions on today's presentation, and this is just a snapshot of our wholesaling team supporting IDC across the country. And just last words. Thanks for tuning in, everyone, and appreciate your time. And thanks, Zach, for having us on.
Awesome. Thanks, Aris. Thanks, everyone. We'll see you next time.
Take care.